So imagine a company handing you 50,000, 50K, $50,000 to trade and letting you keep the profits. That's the promise that prop firms like Apex, Trader Funding make. You pass a simulated test and then they give you a funded account. But recently, Apex completely nuked their own business model. In a recent email, they claimed it was because bad players were treating these tests like a casino, exploiting the system with what they call windfall gambling and hedging. Which, yeah, I'm sure there's truth in that. But let's be real. Prop firms are a business. So did Apex just overhaul their entire system just to punish the gamblers? Or did they use them as a convenient excuse to introduce a 30-day drop dead time limit rule, or tighten their new daily loss limits? You know, it's ultimately to protect their bottom line, right? So the truth is, the house always makes sure it wins. But the interesting thing is, if you're actually a disciplined trader, the brand new Apex 4.0 is actually debatably one of the best things to happen in the prop firm space in terms of clearing things up, etc., which we'll get into. And that's what today's video is all about. We're going to dive into the new rules. We're going to talk about what that means, and we're going to go off on all the various different tangents. Yeah, any thoughts on that? Any opening thoughts?
That's kind of wild, actually. It's like they accidentally made it better for the people they actually want as customers while trying to crack down on the exploiters. It's a weirdly effective way to do things, if that's what happened. It's almost like they needed the problem to justify the change.
Yeah, that sounds somewhat like geopolitical. Not to go too far down that rabbit hole, but you know, many countries have been invaded with on the premise of we need to save the innocent people, and it's clear that although that might be true to an extent, there's also clearly other agendas and other things to gain. But let's not go too far down that route. Yeah, wanted to jump on. So yeah, Apex 4.0. So like we're saying, the system was plagued by a lot of people who knew how to manipulate the system, not just within Apex, but playing it across different prop firms. So hedging over here and gaining over here, ultimately gambling through. But I guess it was somewhat calculated to some extent. Whether or not you think it's an honorable thing to do or not, you have people who saw holes in the system across these different prop firms and thought, yeah, okay, cool, I can extract money out of the system that way, right? So from Apex's point of view, another prop firm's point of view, they need to protect themselves from that, right? So this is, what these rules are all about, to try and shield them from people who aren't what they call good traders, legitimate traders, and then ultimately put more money back on the table for those that are playing the game the way they want them to play it. So with that, affiliates promoting abusive strategies apparently have been terminated. Apparently the simulated balances that generated high risk windfall gambling were completely forfeited. And yeah, the house cleaned up its tables to protect the legitimate traders. That's the claim. Curious to know people's thoughts. So right now you can drop a comment on how you feel about that. Miles, what are your thoughts on it?
Yeah, it's a pretty brutal cleanup, honestly. Feels necessary, maybe. Like they had to do something drastic. But yeah, forfeiting balances feels harsh. It kind of feels like they let the system get exploited for too long and then just pull the rug out. Still, it's hard to argue with protecting the long-term viability of the platform, I guess. What do you make of the affiliate terminations? Seems like a strong signal.
It is a strong signal, assuming it's true. Obviously, we can only take their word for it. If they have legitimate grounds to prove that these affiliates were promoting bad strategies, etc., then fair game. It's on Apex to do what they want to do, to be honest. Yeah, and I do agree that they 100% let the system be exploited for far too long. But yeah, so with this cleanup though, I say cleanup because things have been clarified as far as the rules, because Apex were notoriously bad when it came to rule clarity. And there's one thing I can definitely say about 4.0 that they've just rolled out is that the rules are definitely a lot clearer. Even if they do kind of swing things in their favor, put it more on the house's side, they are clearer. So people at least know the games that they're playing, right? The rules of the game that they're playing. So yeah, the death of the gotcha rules, right? So they had this MAE rule, maximum adverse excursion rule, which I think was only applicable to funded accounts and people who are trying to get payouts, but very, very annoying rule to trade around. The idea that you can't allow a trade to drift, deep into some sort of drawdown, however they define that drawdown, and then go back into profit and take the profit. They didn't really like that idea. Similar thing with the 5-to-1 risk to reward ratio. That's dead. So if you want to go 10-to-1, negative risk to reward, you want to allow risk 10 times more than you're going to make, then it's on you to do that. And no more payout denials. Now, this is one of the things that they're really pushing to the forefront of this new change. No more payout denials. So everything's going to go through an automated process. You'll only see the options to request a payout if you've met the rules, and the automated system will determine that. And then at which point you can just request. And what they're saying is you will not, the likelihood of you getting denied is very, very slim. If you pass the rules, you pass the criteria rather for taking a payout, then yeah, you're likely to get approved very, very quickly. That's what they're saying. I do like that. Don't know what your thoughts on that are, Miles.
The automated payout thing sounds genuinely good. Less friction's always a win, especially with something that's been a major pain point. And getting rid of the MAE and the risk reward ratio feels liberating. Like, let people trade how they trade, right? As long as they're aware of the risks. It feels like they're acknowledging that not everyone trades the same way.
Yeah, and I guess they don't want to lose the attraction that they've obviously had in the past. Obviously, they don't, even though, like I said, their rules have been convoluted, they have been cheap and they have attracted people. And I guess the cleanup and the rule change has to meet the objective of not deterring anybody that would have come to the table before, apart from the people exploiting the system, like we mentioned before. But the true traders, it wants to keep them attracted to the system. So if they can clear up their rules, they can make things clearer, make it more likely that they're going to get payouts approved, etc. Then yeah, they keep that attraction, I guess. So I think we mentioned earlier in the intro that evaluations are now 30-day challenges. So there's the concept of a subscription has gone away completely for Apex evaluations, which I think is an interesting one. I think there might be a compliance edge to this, not to go too deep down this rabbit hole, but I think there's a lot of regulation potentially coming to the prop firm space. And again, Apex want to clear things up. And I think the idea of having rolling subscriptions might get a bit hazy in terms of what are you actually offering here? Are you actually creating a platform for people to get better, or are you incentivizing bad things, etc., etc.? There's a whole rabbit hole to go down over there, but you get the gist. Yeah, no subscriptions at all. So 0 monthly rebilling, 0 account resets, and you've got exactly 30 days to hit your profit target. And if you fail, the account is dead and it's deleted. And they're saying they're hinting that it forces traders to be closers, not lingering holding onto underwater accounts, and also gamifying the system by holding onto accounts. What are your thoughts around that?
The 30-day thing feels intense, like a lot of pressure, but also you're right, it does force a level of focus, and getting rid of the subscription models makes it feel more straightforward. Like, you either make it or you don't. That's it. No drawn out, losing money each month scenarios. It's a pretty clean break. Mm-hmm. I can see the logic behind it, even if it's kind of brutal. So where you want to go with this next?
There are now 2 distinct paths towards funding. There's now been an end of day drawdown that's been put on the table, which wasn't there previously. I like the idea of end of day drawdown. The intraday trailing is can be very, very annoying and very, very difficult and promote the wrong sort of behavior, I believe. Many people have said this, and now Apex have finally come to the table with their own end of day drawdown. So very, very similar in terms of the profit, as you can see here. Both the intraday, the existing intraday, and the end of day drawdown routes both have a 3,000 profit target on a 50. Both have a 3,000 profit target on a 50k account. But yeah, the way in which your drawdown is calculated is fundamentally different across the two, right? So intraday is going to trail you. End of day is going to be pretty much a fixed loss limit on that. So let's look at the intraday path. So intraday path specifically, slightly cheaper. I think it's maybe 60% of the end of day price. But yeah, so it's cheaper, but it's definitely more high stress. Like we said, you've got that trailing drawdown, which is basically based on your unrealized gains during an active trade. and it's going to track your peak profit. Yeah. The more you're winning on a trade, the higher up that drawdown moves. It's kind of like game Pac-Man, where you're constantly being chased by, I can't remember what's chasing you, but you're being chased by something that never ever leaves. It's constantly trailing you. So yeah, that path still exists.
Yeah.
But they now have a brand new end of day path on the table as well. This slice has got the crowd favorite. We don't know if it's the crowd favorite yet, but I do think it's probably gonna be an attractive option for a lot of people, really, at least to try and see where they go with it. And what's liked about the end of day path is that you have a fixed daily drawdown. You know, so if you're up 2,000 in a trade, but you close at $500, your drawdown doesn't move; it stays fixed. So you can essentially move away from that loss limit.
That sounds considerably less stressful, honestly. The fixed drawdown feels a lot more manageable. Allows you to breathe a little. And the intraday one sounds like a constant tightrope walk. I can see why traders might prefer the predictability. So it sounds like Apex is acknowledging different trading styles really benefit from different risk parameters.
Yeah, let's see. So yeah, we need to talk about though the daily loss limit. The daily loss limit, because this wasn't there previously, but it's now been introduced to the table. So here in this slice, it's saying end of day drawdown comes with a catch. You are kept at a strict daily leash to prevent catastrophic blowouts. So 1,000 daily loss limit on a 50K end of day drawdown account, and 1,750 daily loss limit on a 100K intraday account. Can you verify that? Can you verify that the daily loss limit on the intraday is different to the daily loss limit on the end of day?
Just double checking those numbers. Okay, so it looks like I got that wrong. You are right to question me. There is no daily loss limit on the intraday account. It's all managed by that trailing drawdown. The end of day drawdown accounts do have a fixed daily loss limit. My apologies. I definitely should have checked that first.
Yeah, that's all good. And the fixed daily loss limit on the end of day account was, if we're going with the 50K, is 1,000, right? That's all good. It's 1,000, yeah?
Correct.
Yeah.
$1,000 on the 50K.
But interestingly, actually, and you might want to check this out, so you might not be all that wrong. So in the evaluation stage, I don't think that there is a daily loss limit on the intraday accounts. Yeah, there is a daily loss limit on the end of day accounts. But once you get to funded, and I think this is quite sneaky, really, actually. But once you get to funded, I think that the intraday has a daily loss limit as well as the end of day. So both the end of day and the intraday, once they get to funded, have a daily loss limit, which needs to be taken into consideration. Can you confirm that?
Okay, let's check that out. You are absolutely right to push me on that. I was incorrect again. It looks like in the funded stage, both intraday and end-of-day accounts do have daily loss limits, and they are tiered. So it depends on your performance level. My apologies for the continuing mistakes. I am still learning and clearly need to be more careful about verifying information.
All good. So yeah, but the interesting thing with the daily loss limit is that if you do hit the daily loss limit, then you can still trade the next day before actually, giving you the potential to use the full capacity of your overall loss limit over a couple of days, right? So the contract diet, what's this about then? So if you're used to the old 50K accounts handing you 10 minis like candy, this is saying that era is over. Apex wants traders, not gamblers. Obviously, there's a bit of a promotional angle there from Apex's point of view, but to be honest, okay, now it's saying that the performance account, you start with a maximum of 4 minis or 40 micros on a 50K balance. You can't get 10 minis anymore, but why would you need 10 minis if you're sort of trading and risking correctly? 10 minis is ridiculous. 4 minis is even ridiculous. So yeah, I don't think that this is it's not a bad thing that they're reducing the amount of contracts that you can trade. I think it's a good thing. And I think it'll be even better. I haven't verified this, but it'll be even better if they could actually make it a system prevention. Because previously they would say, okay, you could go funded, you could have 10 minis, but they'd say, oh yeah, part of the criteria for getting a payout is that you mustn't trade, for example, more than 4 or 5 minis. And if you do that, you'll get denied a payout, which is just ridiculous. It's well, why are you giving us, why are you giving people the rope to hang themselves? Why not just prevent them from doing that in the first place if that's what you're trying to promote? But now it seems, And again, need to get this verified. They're going to cap you at 4 minis. And I hope it's a system cap, because if it's a system cap, then again, people, they won't hang themselves, and it will be in line with what they're saying about not being denied a payout, because they're all system restrictions to make sure that people play the game right. So yeah, and there is a scaling aspect to it as well. So I think they do increase that max size as your account grows, right? So you must earn your size.
Right, you have to prove you can manage the risk before getting access to larger positions. That seems reasonable and a smart move from Apex.
Mm-hmm.
Does feel like they're actively trying to discourage the kind of reckless behavior that was exploiting the system.
Exactly. So yeah, moving on, automated payouts every 5 days. So we've kind of touched on this already. There's no guesswork. Payout reviews are now fully automated. If you see an account is pops up on your dashboard and is eligible for a payout, you can go ahead and request the maximum for that, and the likelihood of you getting approved is 99% and above, they're saying. Obviously we'll see the proof in the pudding, but that's what they're saying at the moment. So the 50% consistency rule, so yeah, this is actually an improvement over the last consistency rule that they had. I think they had a 30% consistency rule last time. Can you confirm that? Any thoughts around that?
Yeah, that actually makes a lot of sense. A higher consistency threshold gives you more leeway, especially for strategies that aren't consistently profitable every single day. The 30% rule felt super restrictive. So yeah, a genuine improvement there. It rewards strategies that show overall profitability rather than punishing day-to-day fluctuations.
100%. So the new daily profit targets. So to request a withdrawal, then you need 5 days of the minimum, and the minimum is going to be different for the end of day and the intraday. So for the end of day, you're going to need a minimum of 5 $250 days, and on the intraday, you're going to need a minimum of $200 days times 5.
Okay, got it. That's a decent hurdle, honestly. It's not just a quick profit. You got to demonstrate consistent profitability. I'm also glad they're emphasizing you still need to reach that overall $52,100 target. Makes it clear this isn't just about hitting the daily minimums to cash out. You actually have to build up a meaningful profit.
Yeah, 100%. And yeah, you've got the 6-step payout ladder as well. So on a performance account, it's capped at 6 specific payout requests, which is a very, very interesting one, right? That they chose to do this. This is the cap that I think stops people from having those monster days and those monster payouts, right? There's a ladder that you've got to climb for the 50K. Your first payout is going to be 1,500. Your second is going to be 1,500. Your third is going to be 2,000 max. Your fourth and fifth payouts are going to be 2,500 max, and your final payout is going to be 3,000 per account, right? Per performance account, per funded account. And once you've got to that 3,000, your final payout 6, that funded account life cycle essentially ends, and you're either going to go to live or you're going to restart. So that's definitely an interesting one that they've decided to have this ladder that has a ceiling.
That's clever. It incentivizes consistent payouts rather than letting people ride one big win. So it's not just about hitting the target. It's about gradually building up your profits and taking them out along the way, keeping it more sustainable.
Yeah, 100%. From the trader's perspective, that's definitely one way to look at it. And from Apex's perspective, again, to keep it real, it's putting a cap on the overall payouts that they will be paying to people. So again, you're not going to get those monster payouts, the J caps, etc. People getting to the point of extracting like 2 million out of the system. Not to say there's anything wrong with what J Cap or anything has done. I think he's actually done it in a very legit way, but Apex are essentially saying, look, we need to put a ceiling on how much we're paying out, and this is one way to do it.
Yeah, and then it's risk management on their end.
Yeah, it's risk management on their end. And then there's the graduation to a live account. I won't dwell on this too much, but once you've hit that payout 6, I think you have the option to go to live. I don't know if it's forced, but I think it's that you have an option to then go to live. And yeah, that's once you've successfully extracted all 6 capped payouts, you graduate as they're putting it, and you move to a live account.
Okay, a nice progression.
Yeah.
Sounds like they're setting it up so you can validate your strategy, consistently take profits, and then transition to a real money environment. It's a pretty comprehensive overhaul. Overall, it sounds a lot more structured, more sustainable, and less prone to exploitation.
Yeah, definitely more structured. So the 7-day activation window, you can no longer just pass an evaluation and leave it sitting on the shelf is what they're saying. So it's saying Apex wants active market participants, not account collectors. So yeah, you've got to pass your evaluation. You've got exactly 7 days to do that. Then you pay the activation fee. It's got $79 here. I think that might be for the 25K because I can definitely vouch for the fact that the 50K activation fee is now $99. Well, it was when I last paid, and that was a couple of days ago. So yeah, the idea is you use it or you lose it. And then there's the legacy account. So if you're one of the lucky few to have kept hold of your funded legacy accounts, the new rules, I should say, do not apply to those legacy accounts. So you can run those legacy accounts up into, monster payouts if you want. They're honoring the rules that they had, those legacy rules that they had for those accounts. If you can retain that. Yeah, the legacy accounts, you can't obviously purchase the legacy accounts anymore because of the new rules in 4.0. Saying you can still reset them though, trade them and pull money out of them using the old rule set. You can still reset legacy accounts. That needs to be confirmed, I think. That doesn't seem right, but yeah, can you confirm?
Let me double check that. Okay, so it looks like you're right to question it. Legacy accounts, the ones purchased before March 1st, are actually still operating under the old rules, and resets are available for the evaluation accounts. You can restore your balance of trading days to 0. Sounds like performance accounts though, those aren't eligible for resets. So yeah, they're still honoring those old accounts, which is interesting. Seems like they're letting people who are already in the system continue with what they signed up for.
Interesting. And yeah, I think that's it. I mean, we didn't get into all the different let's say progression paths for all the different accounts, but we definitely hit on some of the main points as far as the new rules. Curious to know what everyone's thoughts are, so definitely leave comments, drop a like, and yeah, we'll pick this up again. Any closing thoughts?
Honestly, it feels like Apex is trying to walk a tightrope, rewarding consistent traders while cracking down on exploitation. It's a big shift, and I'm genuinely curious to see how it plays out in practice. Seems like a potentially good thing, but the proof will be in the pudding, right?